All right. Hey, everybody. Welcome to my presentation. I'm going to talk about my favorite indicator called the roadmap line. It's based on Elliott wave theory, Fibonacci's, and just a bunch of stuff I've learned over the last 20, almost 30 years of trading. And we can plot long-term setups with it. We can plot short-term setups with it. It works pretty much on all time frames. And it's been a very powerful tool. I am a trend pullback continuation trader. This is a trend pullback continuation indicator that shows me where support and resistance are in the market, depending on if we're above or below the roadmap line. And as we go through, I'll show you more about that and how it works and give you an opportunity to request charts. And we'll go through tickers and just kind of break them down. And you can give me time frames and all that sort of stuff here today. So this will be your time as well as it is mine. And I want to thank you for coming here today and being with me. Today, I want to walk you through one of my favorite indicator setups for long-term setups, like I said, and short-term setups and everything in between. It's an indicator I built and coded from scratch myself. I'll walk you through why I built it, when I use it, how I use it, and then we'll go through the market and look at some popular stocks and maybe some of the stuff you request. We can look at the Mag 7. We can look at NVIDIA because it's reporting earnings probably already come out by now. And maybe some of those stocks you suggest, as I keep saying. Then at the very end, I'll give you a quick chance to claim the indicator for yourself if you want it, or I'll give you the code for it here during the presentation. So if you just want to copy it and not, click the easy button and put it on your chart, that's fine too. If that sounds like a plan, let me know in the chat right now. Give me a yes in the chat, and great. Now, before we dive in, let me give you a mercifully brief introduction on who I am and maybe a little bit of why you should even listen to me today. I'm definitely not a Wall Street veteran. I'm no former hedge fund anybody. I've never worked for a bank. I've never done any of that stuff. I don't have any insider connections, no black box system. I'm just a regular kind of guy, just like I'm sure a bunch of you. Just kind of came up through the school of hard knocks in trading. What I am more than anything, though, is a lifelong tinkerer and a hard worker. I like to tinker in the markets. I like to experiment and try to figure stuff out. I started paper trading when I was in the 3rd grade. Think about that. I was single digit years old. And I opened my first brokerage account when I was just 18 years old, right when I was legally able to do that. I'm also a civil engineer, urban farmer, Eagle Scout, troop leader, crypto miner, beekeeper, amateur pilot. Now a sawyer. I bought a sawmill a couple weeks ago. I just kind of collect skills and hobbies, and I tinker and figure things out. That's kind of my life, And I love helping other people, and that's why I decided to do this guru thing and teach others people how to do it. I just love figuring things out, accomplishing stuff, and helping other people shortcut all the grind. I'm obsessed with figuring out the markets pretty much my entire life. It's one of those skills, like I collect skills, right? That's kind of the bottom line of what I just told you. And beating the market is one of those skills that's just incredibly difficult. My wife tells me all the time, she thinks that that's why I'm drawn to it constantly, because it's not consistently beatable by anybody. And that's kind of the whole crux of the matter, right? And if I'm being honest, the stock market is probably the hardest of my hobbies to have a ton of consistent success in. I mean, kind of fits, right? I mean, you wouldn't be here today. You wouldn't be listening to me right now if you didn't maybe have a little bit of trouble having consistent banger success every single day in the markets, right? Now, like I said, I have no Wall Street connections, no epic trading mentors, no, I'm not I wasn't Warren Buffett's protege or anything crazy like that. I just have a few decades of trial and error and persistence to keep going. And along the way, I figured out some stuff that works more often than not. As I tell my followers all the time, sometimes I get lucky. And to answer your question, why should you listen to me? It's just that. After a few decades of mostly struggling along the way, I think I figured out some valuable stuff. And it's relatively easy stuff to do if you have the patience and discipline to follow through. Over the last few years, I've been blessed to make some incredible breakthroughs in the market. Stuff that took me from mostly struggling to generating over $1 million in profits with my family's trading accounts in just one short year. Generating trades with over 300% net return last year while the markets were in turmoil, and the year before that, while the markets were in turmoil, winners and losers accounted for. And developing an algorithmic opening bell alert with an 81% success rate for a group of testers who were killing it almost every day. And some of the top trades from that, like, look at these: 40% in 9 minutes, 65% in 7 minutes, 108% in 34 minutes, a ridiculous 475% in 35 minutes. And you know what? The system uses the very indicator I'll show you here today. And I've even ventured into crypto, predicting virtually the exact top in 2021, the virtual bottom in 2022. And I've helped a lot of my readers and friends and followers make an absolute killing. A lot of them putting up numbers like 6 figures in a single day last week on the initial pop last Monday. I mean, just absolute craziness. Craziness. I don't list all that to brag or make you think I'm special. No, no, no. I want to show you I'm kind of the opposite. I'm just a regular dude from Tennessee who failed enough times that I learned some pretty amazing things in the market, and it's stuff that other people can do just like you. And the most important foundational lesson I learned, I want to share here with you today. It's the market roadmap. That's the thing I want to share with you right here today. It's a foundation for pretty much all my strategies. And the core of it runs on fib tools. All right. Fib tools are what makes sense to me. I'm not saying they work for everybody. I'm not saying they're the magic bullets. They work for me. They help me predict crazy turns in the market. And you can plug fibs right into your TradingView account. I mean, there are tools built in to pretty much every trading platform. Now, some key settings and colors, if you ever happen across me on YouTube, JeffryTrader.com/YouTube, I use these same colors every day. Now, key ratios for support, I like the 100% and the 1.0. I love the 1272 and the 1618. Those are extensions I use. And more recently, I added another number right in between the 1 and 1272 called the 1.1448. That's not a fib number. If you're familiar with fibs at all, you're like, where did that number come from? That's 90% of the way to the 1272. And I found it's a pretty darn good conservative target. Now, sometimes in some platforms, these are called projection tools or fib-based extension tools. We'll go through what they look like here more in a minute. Now, key ratios for retraces, the 382, I use that one more these days. The 0.5 and 0.618 and 0.786, those are my 3 favorite retrace zones. That between the 0.5 and 0.786, and if it hits the 618, that's the money right there. I turn those on with a retrace tool, and I'll show you more about that here in a minute. I also call that a 2-point tool. This one up here, this tool, the projection tool, takes 3 points, 3 clicks on a chart to get it to draw. This one down here takes 2 clicks for retrace, 1, 2, so I call it a 2-point tool. Now, key resistances. Sometimes we see resistance at the 618. And once cleared, and we'll talk about this here in a minute, how the roadmap line entry, the conservative entry works. Once cleared, we get the 1.0, that 1.1448 I was talking about a minute ago, in between there, the 1.272, which is the actual target, 90% of the way there, and the 1618, the 2618, the 686, really, really special. If we get to the 686, that's 686%. That is a very unique move right there. And I use those with a retrace tool. We'll show more of that here in a minute. So here, like I was talking about, this is from TradingView, a screenshot here. The fib retracement tool, that's that 2-point tool I mentioned a second ago. And that trend-based fib extension tool, that's that 3-point tool. Takes 1, 2, 3 clicks, 1, 2, 3 bubbles on the little icon. And this one over here has 2 bubbles on the icon right there. Now, here's the settings I like to use. It's kind of rough to see. We'll go through it more in a minute, but you can screenshot it, give you a couple seconds. And as you can see, I kind of turn off and adjust some of the settings. I don't have backgrounds, and I kind of get some consistency on the colors here, with the 686 being that pink, that 786 being the blue, the 0.5 being the blue. Also, I keep that one turned on a lot. And then the 1, the 1.0, color that red, and then the targets I tend to color green. And then some other settings down here. If you're in TradingView, those will look familiar. Now, some more fib settings for the trend-based fib extension tool. Generally, I have the 1.0, the 1618, the 1272, and the 1.1448, and I color that one purple just so it stands out on the chart a little bit. So there you go. You can turn the 1.1448 on both tools, really. And this setting down here at the bottom, do the fibs based on the log scale. Now you have to put your chart into log mode before you can check that box. I have it turned on both of these. If your chart is not in log mode, you won't be able to turn it on. So you have to put your chart in log mode, edit the settings, and then when your chart's in log mode, it'll use log mode. When your chart's not in log mode, it'll turn it off automatically. It's kind of a handy dandy trick, and a lot of people have trouble with that. So now some terms, some terminology I'm going to use here today. The 2-point tool right there. For the 2-point tool, we'll have a high, a start point, a low, an end point, and it could be vice versa. It could be the start at the low and the end at the high. And we have a resistance, that's 618, and we have a target up here. And like I said, we have the 1.272, and more recently, I've been drawing the 1.1448 right in here as targets. Now, we also have the 3-point tool, and this will take 3 clicks. So you would start at a start point, the high, you would go to a low point, and what that allows you to do is compare that pullback right there between the high and the low with the current pullback right here. And sometimes it provides you with some support and resistance zones. So this would be support since it's under that high, and you're looking for a pullback right there. Now, that new high would be the 3rd point. So you click 1, 0.2, and 0.3 over here to compare that prior pullback with the current pullback. Why would you do that? I told you, trend pullback continuation. The market tends to do the same size pullbacks quite often. We'll go through more of that in the chart here in just a minute. Now, fibs help me identify entries, exits, stops, and targets. It's pretty much the full thing. Like if you're trying to look for trades, you're like, well, how do I find an entry? It helps you. How do I find the exit? Bingo. That's the same as the target, right? And the exit, same as the stop. So entries and exits, it's like 3/4 of the battle done. You just need a ticker now, right? Just need a ticker. They're like a Swiss Army knife of trading indicators all built in together. Now, we can make them even stronger with a little bit of EMA action, all right? Now, Fibonacci-based EMAs and some colors that you may see across my charts, and I've kind of singled in on this one over here, this 1448. If you're not familiar with the Fibonacci sequence, it starts out 0, 1. You add those two numbers together to get the next one, which is 1. You add those two numbers together, get 2. 1 plus 2 is 3. 2 plus 3 is 5. 3 plus 5 is 8. You know, on up to 144. And that's these are kind of ones I like to pay attention to. I use a 3, a 5, 8, 13, 34, 144. I use these numbers quite a bit. Now, here's the code to my favorite indicator, the roadmap line, right here. If you want the code, here's the code. Now, if you want to put it in some other platform besides TradingView, you'll have to do a little work. But essentially, it's the 144 EMA and the 169 EMA right there. And we plot them as a cloud and fill between the cloud, and that's how it kind of comes together right there. That makes a cloud between the 144 and 169 EMA, and that's kind of like as simple as it is. Now, 5 and 13, you could use that as an entry point. I have a little better entry that I've been using more recently, but that kind of cross could be a trigger if you want to be super aggressive, and I tend to be a little more conservative these days. So why EMA? What's an EMA? EMA is an exponential moving average. That's a type of moving average that places greater weight and significance on the most recent data points. The exponential average is also referring to exponentially weighted moving average. All right. And, this is just right from Investopedia. If you wanted to go find out more information, how to calculate it, you can go look it up. All right. The most important part of that, though, is it places greater weight and significance on the most recent data points. To me, nothing in the market is more, there's no other reality. You can use whatever indicator you want, but the current price and current volume is the ultimate truth in the market. It's not sentiment, it's not news, it's not fundamentals, it's not earnings, it's not the current price that somebody's willing to make a trade for. That's the truth. Like that's what the trade just happened for. That's the current value. You can say something's undervalued, overvalued, oversold, overbought, whatever. The truth is the price that just happened right now is the ultimate truth in the market. It's hard to argue with that. So you might as well put the most significance on what's currently happening right now. Now, combining fibs and EMAs together, I built what I call the roadmap line, and I showed you the code for that just a second ago. And it charts a course through the markets for me. And it looks something like this right here. And first off, we have price breaking through the orange line. The orange line is the roadmap line right there. This is the setup. We have price breakthrough. It exhausts some point. This can go up or down. This example is up, obviously. We retrace back to and test the roadmap line right there. That's point number 2 we need. So first thing we need, price to come up through. Find some sort of exhaustion. Then second thing we need is it to retrace down to the roadmap line. Third thing we need to do is move away from the orange line and create an entry. Now, this entry that we're highlighting right here is a 513 cross. A little more conservative would be a move above that 618 resistance point right up here. As you can see, price stalled on CVS back here at that roadmap line, or at that 618. Now, targets, right? That's where you get in, either here or here, here aggressively at the 0.3, here a little more conservatively as we cross above the 618, and then ride it to a target. Now, my favorite target, the 1.272. Favorite target. About 70% of the time we hit that target once we cross above the 618. Higher targets, 1618, 2.272, and we'll go through some more of those here in a second. So that's the key. You need the bounce before the trade sets up at all. You need the bounce. Now, when you get out when you're happy with the profit. You know, you don't have to wait for a profit target. You get out when you reach a profit target. And if you feel like you're running low on time, maybe you bought some options and you're just like, you're starting to squirm a little bit, thinking you run out of time, that's a great time to close. If price crosses below the orange zone after entry, crosses back below the roadmap line, that's another great place to get out early. All right. Got the basics down, everybody? You can ask questions if you got them. Now, if you want to see an in action on current setups today, give me a yes in the chat right now. And we can go pull up some live charts right now. All right. We'll go right over here and pop it up. We'll grab a live chart, right? Look at this right here. Got one pulled up hot and ready right there. So here's one on Procter Gamble. As we talked about, here's let me grab my little drawing tool. Here's the high. All right, here, price has been up above the roadmap line for a little while. Came up to a high, made a retrace, hit, and continued down. Definitely through the roadmap line now. Now we're coming back up. The entry would be right here for a conservative entry. Here's that 1448 I was talking about right there. There's the 1272, and right there's the 1618. So as we come up through here, upside targets right there, right there, right there. Pretty cool. If you ask me. Very, very handy right there. All right. Other ones. Let's look at everybody's favorite today, earnings after hours. Haven't reported yet. Up, down in the post market. So we're starting down already. And we'll have to go down to smaller time frame. Turn on extended hours. Starting down, starting down. I thought we might see a bearish move. Now, here you're like, wow, there's a lot going on this chart. So first off, we go back to an hourly chart. Now it respected the chart here and here. So far, that was a high, that was a low, high right there, low right there. That was a roadmap pattern. That was the roadmap bounce right there. This high, this low, we got to the target. And what do we do after that? Stalled and then retraced back to the roadmap line. Happens over and over and over. This high, this low, came up, hit resistance. And I'm a big proponent that when we have gap downs on the charts, that's resistance. We barely filled that, and then starting down a little bit. Back up to break even now. A little bit of volatility. I don't know if they've reported earnings yet or not. Let's see. Highly anticipated third quarter earnings expected to have significant impact on. Report is due after market close. How's this fiscal results? There we go. Reported quarterly 35 billion, up 17%. A year ago. And we go. GAAP earnings diluted per share 78 cents. Previous quarter. Non-GAAP 81 cents. There you go. NVIDIA Live. So it looks like we got a little down pressure. This is actually a setup potentially to go lower right here. Was warning my members this morning on the live stream on YouTube that we may see this continue down here. And that's just an hourly chart. If we go back to the daily chart, has the potential and opportunity to just be the first little flash down here. And we get more continuation that comes down like this to the roadmap line. Last time we hit was right back here on the daily chart. That high right there, that low right there. And you see that 1448, we hit right there. Now, a few weeks ago, I did a presentation similar to this, and Amazon set up. That's the chart I had up when I flipped to the live charts. This entry happened right back over here. Took a little while. That was back in September. Popped up, retested it, chopped a little bit, and then boom, right up to the targets right there. Even got the 1272, and then now potentially we're working on a retrace back down to the roadmap line. This is the trend pullback continuation trade I'm always looking for in the market. Here's the uptrend right here. It's the pullback, continuation, pullback, continuation, pullback, continuation, ad nauseum. Now, how do you know when the trend's exhausted? All right, we pulled back right there and extension. Pull back right there, extension. When things get a little rough, we tend to reverse and go the other way. We started failing hitting targets like right there. We didn't break up, hit that extension there. Then we broke down below the roadmap line, tested from below, tested from below. That sets up a downside trade right here. That low, that high. We went busting right on through down to the 1618 and bounced back to the roadmap line. Set up the next trade to the downside. Grab my tool down here. Right there. And we went down to the 1272 again. Right there. And then we retrace back to the roadmap line. And like I said before, how do you know when it's getting ready to reverse? We fail to get continuation below the 618. And then we bust through the other way. Now, that may or may not have been tradable right there on that move. Bust through the 618, right? Just went cruising on through extensions up to the 272. Retrace to the roadmap line. You see how this hits almost perfectly. And then we get a retrace right there. Boom. Then you draw a new fib. Go running up. That one actually got to the 1618 and then gapped up and kept going. Kept going. All the way up here and then stalled out. And hit that 2618, 2618, a little bit extra, and then retraced. Other Mag 7 stuff. Microsoft. This one retraced. Failed to break above the 618. Right here. Retraced to the roadmap line again. Failed to get above the 618 again. This one might be signaling that we're about to get a deeper retrace on Microsoft. Apple. kind of the opposite here. We got the bounce, made it above the 618 level, holding, holding, holding. Upside potential right there, 243 would be my expectation. Now, if you've been around me very long at all, you hear me talk about these Fibonacci lines are not definitive lines. The 1272 is my target 70% of the time, but it tends to be kind of a fuzzy zone because, well, I can code the Fibonacci numbers. I can draw the Fibonacci numbers. Almost every platform out there has the Fibonacci numbers. That means every algo programmer out there can program these Fibonacci numbers. Now, some algorithms out there like to front run. Some algorithms out there like to push things past, out there beyond what's reasonable. So that's why I commonly hold that these are kind of fuzzy zones for the algorithms. 90% right here, when I use that as a conservative target, this 1.448, 90% of the way to the 1272, it ups my win rate about 5%. So I go from about a 70% win rate going for the 1272 to about a 75% win rate by using the 1.1448. Now, it's not just to necessarily get out right there. While I do that quite often, a lot of times I'm watching the price action. If we're softening up as we come in there, I'll go ahead and get out. If we're just ripping right on through, maybe I'll wait for the 1272 or maybe even the 1618. Now, the 1.1618 level right here, that probability drops down to about 35 to 40%. What does that mean? It means once we cross above the 618 with this trade right over here, this across 4,000 tickers that I've tested this on, over 10,000 trades on the daily chart. That right there, that level gets hit about 75% of the time. This level right here gets hit about 70% of the time. This level up here, only about 35 to 40%, roughly, on one big move before we get a retrace back to the roadmap line. So a lot of times we turn down right there. About 5% more of the time we stop right there. Sometimes we get a move up there. And a very classic way we do that is to come rocking and rolling up here, bounce off, get the extension, bounce off, and get the extension. That price action looks kind of familiar. You see that over here. We do that same sort of trend pullback continuation move all the time in the market. This one over here failed to reach the target. Went from the high to the low, came up a little shy, went back down. Now, stops. I like to look at the low and then take $1 off and make that my stop. You can say, I don't like the way that is. That's cool. You don't have to do it that way. That's commonly how I do it for these setups. So that's Apple, that's Microsoft. Let's see, we did NVIDIA. How about Google? Right here. That high right there. That low right there. And we're just sitting here right at the entry. Potential for this to rock and roll right on up there. Now, if you've never seen this before, I do actually have statistics. So this one is a higher probability. 13 times that this roadmap bounce is set up on Google's chart. 92% of the time, it goes on to hit that 1448 right up there. Done that 13 times in the not too distant past. One right there, one right there, one right there. This one didn't kick off an entry yet. I can pull this up for any ticker, any time frame. So we've got Microsoft, Apple, Amazon. Already hit. We've got NVIDIA. We've got this one used to be a FANG stock. I don't know these days, but right there, all the way up to the 2618. This is what I was talking about. Sometimes we keep going. We kind of popped up to the 1272, retraced, hit the 1272, retraced, hit the 1618, paused a little bit, bounced off that 2.272 briefly, right to the 2618. And now, where might this go? It's possible we keep climbing. 3618, 4236, 686. This would be a less than 1%. Less than 1% of the time, we can just rock and roll straight up without getting a retrace back to the roadmap line. What kind of stocks have done that? Well, this one over here did it from way back over here. Did it plus some right there. You see where it stopped right on the 686, stopped right at the 4236, right at the 686, and then it proceeded to climb even higher. And then finally got the breakdown. So sometimes they can do it, not all the time. All right. Anybody have any requests? You can throw them in the chat. Otherwise, I can keep going on a few others like Tesla. Right here. This one bounced right there. We're at the target. Possibly can climb to 385, maybe 416. Right there. We're kind of grinding that 1618. Didn't retrace it. Just briefly kind of paused. Now it looks like we're set to rally on higher here. Right up in here. Next level's up. Now, that 3-point tool. That looks like a relatively bullish continuation here. Going all the way off the low and then retrace. 393 may come into play right here as a 1618. Comparing this move up with this move up. We tend to do similar type moves in the market. This would be a 161.8% extension of this first move up off of this low right back here in April. All right, I see NOW. On the daily time frame, I would kind of think that this one's a little bit played out for now. There's the high right there. There's the low right there. We've come all the way up to the 272 without getting a retrace back to the roadmap line. It's popped up. Got the target right there. First target, retraced pretty deep. Went on up, just went blasting right on through. Briefly paused at the 1272, retraced, and then popped it 1618, retraced it. A little trouble getting through, then boom, 272 right there, 2.272. Beautiful. That may retrace it right there. Back to the roadmap line. XRP USD. This one gets more complicated because it consolidated for a long time. Right here. Just a bunch of consolidated overlapping crap right there. Now, if bigger picture, bigger time frame. Here's the crux of the matter. Here's the problem, if you will. We're in a downtrend on the monthly chart of lower highs. Seen this before. Looks a lot like GME. First pop, second pop, third pop. If you've never seen this before, it's a very common hype pattern in the market. And it's going to have to break above that 618 level right there to have any chance of going higher. Back to the $2 area for XRP. That pattern right there looks a lot the same. Bump, bump. This one looks a lot the same. Bump, bump. A little bit smaller, a little bit different, but a lot the same. Same pattern over and over. XRP kind of exhibiting those same signs right there. Sometimes you got to zoom out. All right, DPST. So the easy one right here, it bounced right back here, was the biggest one. Trouble getting through, trouble getting through, trouble getting through. Boom, all the way to the target. Now we're running out of steam. 618, 1.618 right there. Coming down. If it can hold, we could go on up. If it starts breaking back below the breakout over here, starts coming back into that, probably going to come back to that area right there. 3x on banks. So watch out right there. Next level up 189, possibly 207. Climb the fib ladder on higher. Meta. Yeah, I did skip meta for the mag 7. This one's sitting at target. Like it can't, it's having a lot of trouble getting through this 1618 level right there. Move the drawings, draw it back on here. This high right here, this low right there. Now 1618. Struggling. Like it didn't even slow down at the 1272 just briefly and then ripped right on up to the 1618. That may be indicating we're going to have to get a retrace right here before we can get more energy to go higher again. Or if that doesn't hold, we could come down much further on a retrace, possibly somewhere back in this zone right there. That was one heck of a move up from this low back here in 22 to this high right here. This could be finished for now, and we need to do a bigger retrace that does something like this. It is 300 area on meta. All right. And no problem, John. Glad to have you as always. Major John. All right. Other things. Anybody got something else? Any other pet things? This one's been pretty hot today. Bigger stock than this has been more traded than Tesla, Netflix, Nvidia, Meta, all of them put together right here. Pretty hot one. A lot of people are like, well, where's it going to go? Where do we target? So we start with this low here, this little high right here, this little low right here. And on a non-log basis, we may find resistance at 524. But here's where the magic comes in. When we turn it on log mode, we have that low here, this high here, this retrace, pops it up. Crazy numbers. Crazy numbers. But let's pull it back to this one. And this one, let's just copy the first move it did back here on the last Bitcoin halving. It was getting into halving right here. This was the move it did last halving. What if we do that move again? Here's the low in crypto winter early in January last year. We've already done the same size move. We hit the 100. We kind of had a lot of trouble breaking through it. That's the consolidation we had from March through just recently. Now we're extending. We already hit the 1272, the 1618 up here around 877-ish. Maybe even up to the 272 at 1,000, or I guess that's 4,000. So somewhere right in this zone might be where we top out. Wouldn't surprise me to hit 1,000 right in there. Now my fib lines aren't perfect. You can significantly affect these just by little moves, and I don't like the magnet because it always snaps on the wrong thing. So there you go, right around 1,000 on the 1618. That's what I'm kind of thinking. Right around 1,000. So that's what I'm kind of expecting right there. Really subjective, which high, which low you click on. Getting it perfect. Maybe only 867. Things that are really hyped up tend to keep going. Speaking of Bitcoin, a lot of people like this one lately. Let's check this out really quickly. So maybe you've heard about the fourth halving, right? happening. And maybe I should pull up the all-time history chart so I can get the entire thing going here. So where the Bitcoin came to life here in 2009, kind of went through this first cycle right here. We had a halving in 2012, which we pulled back into, and we rallied and hit the 272 right there. First halving right here. That was the first crypto winner right there. That was the, hey, Bitcoin's on the market run. Then we pulled back. First crypto winner, first halving run, hit the 272. We hit the 1618 right there, and then went on to hit the 272. That's pretty cool, right? But then we topped out. We had another crypto winner, another sucky time. Everybody thought Bitcoin was going out of business, going bust. It's worthless, right? Crypto winner. 2016 happened. Another halving happened right in here. Bitcoin rallied right up through 1618 and the 272 right there. Boom. Beautiful. Stopped right there and retraced. Again, crypto winner. Ugh. Sucks. Bitcoin's going out of business. All the fear, the uncertainty, the doubt. That high, that low. Crypto winner. Another halving event where the miners got cut in half again, right in here. Bottom was back here. Rallied up, retrace, rally up, hit the 1618, retraced. This time it was a little different. We double topped at the 1618. Didn't make it to the 272. Interesting. Crypto winner. Everything sucks. Tons of people really disappointed in Bitcoin. Made a bottom. November 22. Right in here. Pulled back. Now we're ramping right here in April of 24. Right after the peak right there, we had halving event. Continue to pull back a little bit. And now we're breaking out. Now, every halving event in the past, it's only been 3, not a statistical population, but it's happened 3 times in the past. This is the 4th. Every single time in the past, we've hit at least the 1618. Now, I didn't quite click on the high there. That puts us right around 170,000 as that 1618. That's pretty cool. It jives with a lot of times we see 10 to 20 times higher from the low to the target. 10 times higher than that right there is 157,000. 20 times higher than that right there is 314,000. So that kind of gives us a target zone for Bitcoin. If MSTR, which has been trading like leveraged Bitcoin, continues higher, we could see it on up at 1,000, and this kind of all jives together. So my Bitcoin target area right in here between 150 and 300,000 sometime into early next year. Then we'll do another crypto winter and we'll pull back, probably the same size we've pulled back before, around a 70 to 80% pullback. Right there, pull back, about a 77% pullback. Do that about every time. If we stopped at 170, do that 77% pullback, it puts us right back at 40,000. If we get that high, you probably should protect or book profits. We're likely to pull back again. Coming into 26, maybe 27. It's 2026, 2027. All right. Final request for Mora. This one right here. This one's a little more complicated because it has a much bigger pattern. Let's go to the weekly charts. This busted up through the roadmap line. That was in the last halving run, retraced right here. That was a 618 retrace. This is what I call a measured bounce. A little bit different than the roadmap bounce, but that projects right up there. I already had the fib line drawn. Potential for some crazy numbers. I think that's a little too crazy. 600 seems a little too crazy. I could do it. Just seems a little too crazy. I think 100 might be more reasonable right here. Right there. Might it do it? Maybe. Might it not do it? Might not. That high, that low. Could see it break on higher. Right there. Proof is above the 618 right there at 52. We rally up, break above that. Could see a continuation right up in this 95 to 105 area, right in there. Kind of jives with the other fib line. Now, it could fail. Doesn't have to do it. Could be just the GME pattern. Could be the pop, the drop, the pop, the drop, the pop, the drop. And this could be just a downtrend. Entirely possible. All right. So I want to thank everybody for joining me here today. I want to teach you another pattern really quickly. Let's go. Oh, I kind of already showed you both of them, and I promised to give you a chance to add market roadmap to your charts. So here it goes. You can get that full indicator from the replay of this, and I'm going to give you an offer to just get an easy button and put it right on your thing, plug it right in your charts directly today. And not just the code, but an easy button right there for TradingView, and I have it for Thinkorswim also. Plus, I'm going to give you even more education on this whole thing, already pre-recorded, ready for you, and packaged up so you can use it right away. I welcome you to a private chat room so you can chat with me, ask questions, and get help with this, not just leaving you to the wolves here. Plus, every week, I'm going to send you a personally curated watch list of stocks that I think are primed to bounce off that daily roadmap line and last like 3 to 5 months as far as a bullish trade goes. Now, with all the stocks I think are making those strong market roadmap potential setups that I'm going to give you each week. And usually I charge $49 for this, but if that sounds like a good deal to you, here's what you need to do. But wait, inflation sucks. And you know, that price, it's a little steep here today. So how about I cut you a better deal? How about I give you a $5 special right here? Now you can go to jeffreytrader.com/MRMYT right there, or you can give my team a call, 321-888-3962, press the number 1. You'll have to ask for the market roadmap $5 special to get that, to get started today. Now, we've already seen it live in action here. So I'll give you another opportunity to request a couple more tickers if you want to, if we have a few minutes to wrap up. I don't know. I think I was the last one for the day. So otherwise, there you go, right there. And wrapped up a couple of minutes early. If you want to call it a day, you can. David?
Oh, there's actually one more after you, and
One more?
it's
All right.
not in the room yet. So if you want to look at a few more charts or anything, you have a few more minutes here.
Yeah, so for anybody that needs the link, David's got it in the chat there. And we can hit a few more charts if you got questions. So the other pattern I was talking about was that measured bounce pattern. That's where we move up. I have to put this back in a log mode chart. We make a move up off a low and a retrace to a 50 or 618 and then get an extension. This one worked right there, and we came up shy of the target. So there's more potential left on the upside for this one off of that low. And then this one back here also is the same pattern. So it's a nested one of these patterns. We have this low back here, this high right here. I call it a measured bounce. I use the 3-point tool to compare the first move to the next potential move. And that's where this gets really crazy. I don't think we're going that high, but maybe. It's on the chart as a potential. That would be absolute ridiculous. Now, the reason this might work for Mora is they're starting to do the same thing with Bitcoin that MSTR is doing, MicroStrategy. So that would be pretty wild right there. Pretty wild. Another one. How about silver? This is one I've been pretty hyped up on right here. This a big time frame Really, I think it's the monthly chart that this bounces off of. Yeah. Monthly chart, market roadmap bounce right here. That high right there. That low right there. Just crossed above the 618 on this logarithmic chart. Sets this up for a potential run up here out for the next couple of years. See, the last time we did the roadmap bounce right there, shot right up. I love this pattern. Shows up all over the place, all different time frames. That one exceeded the 1618. If we were to do that again on silver with this one, taking a long time to ramp it up, that could be up to $120 an ounce on silver. Really nice, beautiful potential right there. Now, for those of you thinking, well, what about gold? That one's already played out. Potentially working on a retrace over here. Gold already had the high, the low. We're already playing it out to the 1618. Possible we get an extension to 4 or 5,000. Possible. Gold looking a little more played out than silver. Alrighty. Any other questions out there? The EPST. I think I missed that a second ago. So upstart. This one, now you got to be a little careful. This chart definitely looking a little sketch, but there's the pullback. We did all the way back here in 23, and we just now hit the target, the minimum target. We could get an extension on up to this 99 area, possibly 150. After a little cool off, pop it there, pop it there. Maybe crazy 340, but so be conservative. I find that if you're more conservative on your trading, works out a little better for you. Now, most stuff, if nobody's ever told you this before, most stuff that does an IPO, that's what that little dinosaur means, starts out in a correction. Even though this rallied, that was overlapping, very overlapping on the way up. The lows overlapped prior highs. Then we went down and made a lower low. Very common on IPOs for this to happen. We start off in some sort of corrective overlapping junk, and either we immediately make a lower low or we do some sort of crazy move, then make a substantially lower low. So this could be working out of the bottom here. It's got a lot to prove if it's going to. That was the lowest low, that initial move up, the lowest retrace right there. So it wouldn't surprise me if this ultimately rallied on up into this zone, retraced, and possibly up to there, which that kind of jives with the other numbers right there. Of course, this could fail. We do have a giant gap down. That's resistance right there. A little trouble getting through that. Could just fail here, break down below the roadmap line, and continue on down to a lower low. That's the risk. So watch that right there as an exit point. Another one with nice upside potential. I haven't shown this to anybody else. First time I'll show this off. Already made a move, pretty substantial, but very nice. It immediately made a lower low upon IPO. This right here could be good for a move up into this area. Right up in here. Just broke above the 618. 241, 304, possibly up to those crazier numbers around 700, 800, 900, 1,000 right there. Wouldn't surprise me to get that area right there. All right. Any other questions? Any other anything? Throw this back up real quick before I wrap it up. Right there. Thanks for coming, everybody. Thanks for having me. All right, David.